California approved 17% rate increase for State Farm, okay? 17% rate increase for State Farm. So this 17% rate increase for homeowners insurance effective June 1st, after the insurer requested a 22% hike, they said 22. California agreed to 17, citing a dire situation post-LA fires. Insurance Commissioner Ricardo Lara stated, "We are in a statewide insurance crisis affecting millions of Californians," calling it a tough compromise. Consumer watchdogs Carmen Balber criticizes the decision, saying it adds insult to injury for homeowners facing delayed or lowball claims. State Farm financial distress was acknowledged by administrative judge who found the company is experiencing extraordinary financial stress coupled with surplus depletion that threatens ongoing business operations. Laura noted State Farm must justify its financial conditions and detail its recovery plan at a fall hearing. And this is for homeowners insurance. For renters, you ready? I'm going to let Tom give you guys what the renters insurance increased by. Go ahead, Tom.
And ready for this? It goes up 15% for renters and condos. However,
there's been a big downward shift in California's housing market this year. Inventory is skyrocketing, home prices are dropping, and this could be the sign of the long-awaited California housing market crash that many of you have been waiting for. The U.S. housing market downturn has officially spread to the Southwest U.S. States like Arizona, Nevada, Colorado, and Utah are now all on the doorstep of a housing market correction in 2025 due to a massive surge of inventory on the market. And in fact, prices are already dropping in the Southwest US. You can see.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Blew the bid out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shelter. It's enough water from the most high, even low tide, he gon' wet you. Better learn how to dance in the rain, ain't no use without a
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refi to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live. Man, today on Friday at 5 p.m. We're a little late, y'all, but don't shout us down, guys. We talking business, man. Cliff, how you doing, big time? You doing all right, big dog?
Man, I'm doing good, man. It was a good week. Man.
It was, man. Yes, it was a very good week, man. Got a lot of things going on real fast. Got a new construction project that's about to begin here in a little bit, man, as well. Okay. Man. So I'll be running that by you too as well, which is good. Plug and play. So we got a lot of things going on, guys. If you could do us a favor, if you don't mind, guys, share, like, and subscribe. Cliff, I'm gonna change that. Don't change that photo on the left hand side. I got you, big dog. My bad, man. My bad. Cliff be getting on me about this.
I've been getting all this before. He
be getting on me for real, y'all. So it just been slipping my mind. My bad, Cliff. Next time, y'all hold me accountable. I'll make sure I trade it out because he said, "Look, he looks side-eyed." To me, he look like Tupac, gangster. But
he ain't cross-eyed like that. Don't throw me off like that. Don't throw. You gonna diss me and Tupac in the same sentence? Don't be doing it.
No, it's all good, man. But man, guys, let's dive this real quickly, guys. Before we get into our topics, real class, Cliff, guys, it's really good to have a licensed appraiser that's actually on the live. All right. So Cliff, if you could, man, let's go back in time real fast, man. Give us the current market analysis, man. What are you seeing in the market? What's going on, big dog?
Yeah, I mean, the market's slow, very slow. I've been saying that for a while. So basically it's plateau, it's going sideways. Haven't seen much movement in a while. At first, I mean, the little bit of movement I did see a while back was the interest rates were dropping. Yeah, they hit the floor. They not moving. They're sitting right about 7%, which is crazy because they at one point in time they dropped to 5.5 for maybe a month.
Correct.
maybe a month. I saw them drop to 5.5, but the Fed stopped doing interest rate cuts, and now it's basically sitting stagnant. So I'm not seeing a lot of movement. The only movement you are seeing is in new construction. That's about it.
Now, why in new construction?
Mainly because well, it's just the inventory. So anybody with an older home, they're sitting on 2, 3, even 4% interest rates. There's no you're not going to sell that and go into a 7% interest rate.
I agree.
So you're seeing that issue, and then in addition to that is new construction. They can give rebates to lower interest rates, so
Yes,
they
they
can,
can.
you might, if you go to, Rocket Mortgage, they'll give you a 7%. But if you go to a new construction, they may be able to get you a 5.5% and give you some reductions in that. So, you'll get some customers who want that.
Yep. I'm seeing the same thing when it comes to the market. The one thing that it's kind of weird to me, Cliff, is the Fed chairman has been talking a lot, and I don't know why he's been talking so much. I'm just like, okay, normally he's very mild mannered. He talks very rarely, right? But once Trump got elected, he's become very vocal. He's held like 4 or 5 news conferences. I'm like, man, he didn't do that under Trump's first administration and under Biden. He was very quiet. Would you agree or disagree?
Yeah, I mean, I do see him talking, a little bit more. Man, this is what I've realized about the Fed chair.
Mhm.
He is slow to react. He's
Very
slow
slow.
to react.
Yeah,
He always wants to see data, but by the time you get the data, it's behind.
yeah,
It's moving.
yeah.
The market's moving faster than he is, and so it's the same thing when we saw inflation. He was still what 3, 6 months behind
Hmm.
before he started hiking interest rates.
Correct.
He's
Correct.
bad. I think he's bad. I think Trump is right. You got to get him out. He moves too slow. Because to be honest with you, the model he's using of waiting for data. Well, if you're going to wait for data, why do we need you? We all get the
Ooh.
data and go, oh well, data says you should hike. Well, duh. Like you're
Yeah.
not adding any value by just. You're supposed to be more insightful than that. That's why we
Correct.
got you.
Correct. And he's not. I think he's a little bit more political, to be honest with you. I
That's
think
true.
he's really gotten very political with his stances. And I mean, that's fine, but we're not paying you to be political. We're paying you to be analytical.
Right.
Paying you to be reading data and to be a forward thinker, not a reactionary thinker. And right now, he's just really reactionary. And that's my kind of quarrels with him. But I kind of agree with you, Cliff, when it comes to the market. The market is extremely stagnant. I don't see him cutting the rates at all until next year. I don't think he will. I think I'm talking about like mid next year. So it's if you're looking to buy a home, guys, you may want to look at make sure your DTI is low, right?
Yeah.
The exact same time, the home that you may be able to qualify for last year or 2 or 3 years before, probably bring it down another $50,000. That's probably what's going to be because I don't see them cutting the rates at all. And you agree or you disagree?
No, I agree. I don't. I think I think he sees uncertainty with tariffs,
Yeah.
and so because there's nothing else, it doesn't make sense. Because the entire situation he's been saying is that he wanted to take a look at inflation.
Sure.
That was his whole thing for 4 years. So
Agree.
inflation is not just low; it's
Yeah.
beating expectations.
Yeah.
That I don't know what else you're looking for. If your own metrics are being met and you're not dropping the interest rate on that, it has to be something else that you're looking at, and that's political. That's
Yeah.
He's looking at the tariffs and he's trying to
Yeah.
say, "Hey, I want to see how these tariffs work out." But the problem is, the tariff situation may not be completely worked out till next year, like you're saying.
Correct. Correct.
So, yeah, I mean,
But
from my perspective, he's just bad.
but then you see the tariff news is coming out with the UK. They got a deal there ironed out.
Mhm.
You have the Ukraine deal when it comes to the mineral rights. That deal is ironed out. You now have China and the US saying, okay, you know what, we'll agree to lower the tariffs, right? And also 90 days to work out a deal. So there's some stability coming around. Then you also have a $3 trillion coming in external investment from Qatar, Saudi Arabia, and the UAE back into the United States. That's why you had BlackRock over there, the CEO of BlackRock over there, the CEO of NVIDIA over there. You had the CEO of these big tech companies there, because Qatar and Saudi Arabia, as well as the UAE, they want to invest in AI and technology. That's what they actually want. So you have this going on. Then you actually have the bill coming out as well, also, as far as cutting taxes and regulations. So there's a groundwork being kind of ironed out there, to where the Fed chairman can say, you know what, if I'm seeing X, Y, Z, I can see us doing this. But it seems to be he's more of, I don't see what I want, so I'm not going to do anything at all. Sorry.
Yeah. I mean, he's not sticking to his own metrics.
At all.
So he's coming out and saying that, like, again, he wanted to be able to see the inflation rate come down. Well, it's been consistently coming down below expectations. So that should give you room to be able to cut. If nothing else, you can do, 25 basis point cuts. I mean, that's not going to really change anything, but at least you're kind of giving some kind of signal back to the market. He's not doing that at all. Then he's mentioning the tariffs as another reason of saying there's uncertainty. So it's like, wait a second. First you said it's inflation. Now you're saying it's uncertainty. It could be anything for the next. I mean, he's looking for excuses, is what I see. He's trying to find reasons not to cut rather than just doing what the market says.
I agree 100%, man. Total political. Sorry about that, guys. This is what's going on in the market. So we have to talk about this. Sometimes we talk about the politics, which is behind business and behind real estate. And we talk about rates as well. Also, you see how government policies, whether it be local, county, state, or federal, can affect your mortgage rates. So we have to talk about all that. Now, guys, here are the topics for today, guys. All right, topics for today. Here we go. Number one, guys, California approves an insurance rate hike. Right? Number two, the Southwest U.S. home prices are dropping. Right? And number three, California home correction is coming. Now, this is after the insurance rate hike. So this is boom, boom. See how dumb they are in California? And number two, because of all of this, you should be focused on distressed property investing. All right, guys? Those are the four topics real quick. So, Cliff, man, let's dive into the first thing, man. Let's talk about this first thing here, man, when it comes to State Farm here, bro, real quick. Where'd it go? There it goes. Man, Cliff, State Farm. These Bamas. How State Farm's rate hike could set a dangerous precedence when it comes to the homes. We're going to bring in our people from Valuetainment real quickly, guys, to walk us through this. And the California state government approved this rate hike for insurance. So, and this is not just in home buying, Cliff. This is also if you are if you're leasing out a condo, anything like that at all. This is all coming out right here, Cliff. So, man, let's dive into this real quickly, man, and see what's going on, how this may be a big deal. Here we go. Let's dive into this real quickly.
California's obviously place that I lived in for 24 years. Yesterday, Giancarlo asks Tom, so did you ever live in California? He says, my entire life growing up. And then you lived there as well
almost
for
18 years.
Or 18 years. So we love the state. Guy Minnect me saying, what problem do we have with California? Don't you realize that this is the most incredible climate in the world with incredible data? I said, yes. But your policies suck, and they're pushing a lot of good people out, especially with this one. Let me read it to you. California approved 17% rate increase for State Farm, okay? 17% rate increase for State Farm. So this 17% rate increase for homeowners insurance effective June 1st, after the insurer requested a 22% hike, they said 22, California agreed to 17, citing a dire situation post-LA fires. Insurance Commissioner Ricardo Lara stated, we are in a statewide insurance crisis affecting millions of Californians, calling it a tough compromise. Consumer watchdogs Carmen Balber criticizes the decision, saying it adds insult to injury for homeowners facing delayed or lowball claims. State Farm financial distress was acknowledged by administrative judge who found the company is experiencing extraordinary financial stress coupled with surplus depletion that threatens ongoing business operations. Laura noted State Farm must justify its financial conditions and detail its recovery plan at a fall hearing. And this is for homeowners insurance. For renters, you ready? I'm going to let Tom give you guys what the renters insurance increased by. Go ahead, Tom.
And ready for this? It goes up 15% for renters and condos.
Wow.
However, 38% if it's not a condo. So condos got their own little lane, but they gave State Farm permission to raise it 38%
So I'm
for
renting
renters
a
insurance.
3-bedroom house.
Yeah, three
From
bedrooms,
somebody,
2 bath.
my renter's insurance, I was paying $2,000 a year. Now I'm paying $2,800 a year.
That is right.
Jesus.
You're up to $2,800. So that $800 is like a car payment. That's huge. And what's very interesting to me is I dug into this, and the administrative law judge, Carl Frederick Seligman, he said, well, this is because of weather events. Another devastating extreme weather event would nearly eliminate State Farm's surplus. Their surplus was $2.24 billion. Now, this is what an insurance surplus is. An insurance surplus is the money they have to set aside because someone's car is going to get stolen, someone's car is going to be in an accident, or you're going to have a fire in your kitchen, no one gets hurt, but you got to rebuild part of your house. That is what insurance is for. And so State Farm, when they sell X number of policies, they have to keep putting money in a savings account to cover all this stuff. They had $2.6 billion in it until Palisades burned down. And all the fires in California led by the Palisade. There was also other ones that were just horrifying. And now they're down to $620 million. So they put $1.6 billion whoosh out into people's hands. Now, those people deserve it because they paid for a policy with State Farm and they suffered a terrible loss. Well, now the judge says, hey, they're down to $620 million. And if there's another weather-related event, boy, that would eliminate their surplus. What's he blaming, Vinny? He's blaming weather.
Yeah.
Weather event.
Yeah.
He's not looking at the empty reservoirs, the fire department equipment that wasn't in working order, hydrants that weren't working, and also decisions that they made about not asking PG&E to clear brush and things. No one's looking at that. Oh, it's just the weather. So it basically is taking the bureaucrats, Richard, Laura, and them out of it and not putting it on people that says, wait a minute. Okay, so we got this situation, and you're right, with only $620 billion, these people, $1 million, people could be in deep water.
So, Cliff, real quickly, what are your thoughts, man, about California raising after this is post the fire? What are your thoughts about California approving State Farm to not only increase insurance rates for homeowners, but also for rental clients as well?
Yeah, I think California's back's against the wall. They don't have an option. The alternative is no insurance.
Yeah.
So they have to be able to allow the people living in California the ability to have insurance, so they don't have a choice. I mean, as he was talking, I went ahead and just pulled up a property in California, put it in State Farm, and what I got was, sorry, we can't provide a quote for this location.
Wow.
So California, what do you do? The truth is, it's exactly like he said. I don't understand why there's not someone out there going, our insurance could be cheaper if we had fire hydrants that worked, if we had brush that was cleared, because maybe the Palisades problem wouldn't be as large as it was if those things were done the right way. You could have saved billions of dollars if it was just contained. But their incompetence is costing the state multiple times. It's costing houses and insurance and increased costs.
Yeah, and I agree with that 1,000%. I believe that it is willful incompetence. I believe that there's no intention to solve the problem, because therefore the grift can if you solve a problem, there's no room for the grift, and there's massive amount of grifting going on in these high bureaucrat cities, counties, and states. It's high fraud going on, high grifting. That's what's going on. And so what you just said makes total sense when it comes from an insurance standpoint, because as you know, insurance is trying to mitigate their risk. So State Farm is saying, wait a minute, you don't have anything in place to mitigate the risk of these brush fires at all. And you wanting us to come in and insure these type of properties? No, the only way that happens is if you raise up the rates. Now, when you raise up the rates, what happens there is clients can afford those higher rates, because it goes up on the home insurance, it goes up on the rental insurance, and also motorcycle insurance, auto insurance, RV insurance, boat insurance, life insurance, all that goes up because a city, county, or state like California does not have the right infrastructure willfully in place, to mitigate natural disasters. I believe this is willful negligence. You agree?
Absolutely. I mean, it's ridiculous because they're getting hit twice. I
Mhm.
mean, the first time is the fact that you're having the natural catastrophes you are as large as they are. I mean, that's
Mhm.
incompetence right there. You should be,
Correct.
doing a lot of things to prevent that. But
Mhm.
then additionally, the houses are expensive.
Yes.
So you're paying twice as much to get things fixed than you should be. I mean, if they allowed more building of homes,
Mhm. Mhm.
if they allowed less regulations for the houses to get built quicker, then
Correct.
maybe that saves you what, at least 30%
Correct.
on your insurance just from that alone.
Correct.
But because they're not doing that well, your house is inflated 30% because you can't build additional inventory. Man, it's amazing amount of incompetence.
Yeah. Praying for you guys, California, because you keep electing dumbasses in your city, county, and state governments. And I gotta say dumbasses because they're dumb. You keep you keep electing these idiots to do it. I know some of you guys say, well, they've been in government their whole lives. That's the problem. There's no outside thinking coming into government to say, hey, this infrastructure is terrible. Your processes are terrible. What Doge is finding at the federal level, that's a good type of case study to show we're bringing in outside thinking who run successful companies at a high level. And they're saying, wait a minute, how in the world did Cliff, when it came to retiring, Cliff, tell me they had nothing set up electronically. Everything was
Who?
stored in a mountain.
Oh, right. Yeah, yeah.
In a mountain, y'all.
That sound
Again, it takes a year for them to process your retirement. 1 year because
yeah,
they have to go find it.
yeah. I heard a lot of crazy stories about. I think they said 50% of the calls into the program were for fraud.
Yes.
Something crazy like that.
Mhm.
I don't know if it was that high, but it's something crazy. I mean, what I don't understand is so we're just finding this stuff about dudes are supposed that's their job, right? They're supposed to
Yeah.
come.
Yeah.
But Walmart, how much money did they make last quarter? We can go find out. It's
Sure.
right there, it's public record. Boom. They got to. They are a public company.
Mhm,
But
mhm.
but the government isn't public. Walmart is. So we have more insight to how Walmart, Amazon, Tesla, how they're run than your state or local government. Why isn't
Correct.
there should be a public information system the same as there is for these public companies? Should be audits. They if it's illegal, if Tesla does something illegal, they get audited, they
Yeah.
get fined.
Yeah.
Where is that not on a local level or on a state level to where we should be able to see that to say quarter to quarter, let's see the audit, let's see the line items line by line.
Mhm.
We can see that. It's
Yeah.
amazing.
Yeah. I think this is willful incompetence. You see that when it comes to Gavin Newsom. You see that when it comes to the city, county, and state officials, even Karen Bass, the mayor of, I believe, Los Angeles. She's atrocious. It's just you begin to see the incompetence, and I believe this is willful, guys. So again, I'm gonna say what my good friend Danny Magino would say: get out of California. It's going to get worse. It is. These Bama's are about to elect the former vice president as their governor. Jesus help them, Lord, Holy Spirit. It's
Especially if
man,
you in Compton.
uh,
we, we,
Cliff.
we was talking about that before. If you in
Yes, we
Compton,
were.
you are paying too much. I promise you. Get out.
Cliff. Well, guys, we're going to compare homes now. All right,
Okay,
homes.
we at this part. All right.
Yeah, we're going to compare homes. All right, Cliff.
Mhm.
Give us a home, the bed, bathroom, garage,
Mm.
square footage, and the price point for a home, and you pick the city.
Are we talking about in California?
Yeah, in California, you can use Compton, you can use
I'm going back.
Palisades, whatever.
I'm going.
Don't
I'm
use
going back.
Compton.
I'm going back to Compton.
Okay, go back to Compton.
I got this one right here.
Okay, talk to us.
New on the market.
New on the market.
I just brought it up. You want the address or what you would? I'm not gonna do address.
No address. No address. No,
I'm gonna give you
just
just
numbers.
3-bedroom, 2-bath,
Okay.
1,070 square feet.
Okay, 3-bedroom, 2-bathroom, 1,000 square feet. Okay, gotcha. Go ahead.
This is in Compton.
In Compton. Okay, in Compton.
See if they got any other. This one is.
Take your time. Guys,
Are you trying to see it in Dallas?
I have one in Dallas already. You tell me the one in Compton. I got the one in Dallas.
Okay,
I got one in Mesquite.
I got it pulled up.
Okay, what is it? Talk to us.
Man, it's fixed up.
Okay.
Looks like it's got new flooring. It looks like a basic rehab.
Okay, cool.
Flooring, paint.
Cool.
Like they did a basic rehab too.
Yeah.
Real
Yes,
simple.
sir.
Like this is like Home Depot type stuff.
Yeah. Okay. What's the price point? 3-bedroom. Was it fit through? How many bedroom bathrooms?
3-bedroom,
Okay.
2-bath,
Okay.
1,070 square feet.
That's a small house, Cliff.
$700,000.
Wait. Where's this located at?
Compton.
So wait. So 3-bedroom, 2-bathroom, 2-car garage?
2-car garage, yeah.
2-car garage? Okay, 1,070 square feet.
1,070. Don't forget that 70.
1,070 square feet. All right. $700,000?
Mm-hmm.
Wow. That okay. Now, let me go to Dallas. I'm gonna choose Mesquite.
Got you.
But ladies and gentlemen, I could not find an equal home with the same square footage, right? Bedroom and bath. I couldn't find it in Mesquite. Couldn't find it. So I went higher. Okay, I went higher because I gotta do it. So this is a new construction home.
Oh, you're going new construction. Okay.
Brand new. Okay. 4-bedroom, so extra bedroom, 2-bathroom, 2-car garage, 2,235 square feet in Mesquite, Texas. Cliff, $439,000. $439,000. So you get an extra bedroom, 1,000 more, actually 1,200 more square feet for a less price point in Mesquite, Texas. I ain't lying. I got it right here. I ain't lying. It's right here. The builder is who's the builder, Lord? I'm gonna make sure I got it right.
And how many square feet?
2,235.
2,200. God.
Bloomfield Homes is the builder. Bloomfield Homes.
I thought I was gonna find one for you, because I found a new construction in Compton. It's a condo.
Condo. Okay.
2-bedroom, 3-bedroom, 3-bath.
Okay.
1,200 square feet.
Okay.
$650,000. Condo.
It's a condo, not a house, y'all. Condo. Okay, condo.
I'm telling you, boy.
Oh, okay. So a new construction home in Mesquite, Texas, with an extra bedroom, 1,200 more square foot, right? New construction from the ground up is $439,000, and a condo, new construction in Compton, California, 2-bedroom, 3-bedroom, 3-bathroom condo, $650,000. $650,000. You got it for real,
man. And I'm looking outside of Compton to see those exact same type of measurements. I see 1.2, 1.3, 1.8, 1.6, 1.3. Crazy. This is new construction this is Hacienda outside of where we're looking at Compton. And because they didn't have anything in Compton with those numbers, so I looked outside of it. 2,500 square feet, new construction, 1.4.
2,500 square feet. How many bedrooms? 4 bedroom.
3-bath.
Three bed. Okay.
Two-car garage.
2-car garage. Okay. So it's 300 square foot bigger than mine.
Mhm.
They have a extra bathroom. All right.
Right.
Okay. Cool. And you says how much again?
1.4.
Wow. Y'all, it's California.
These are numbers. So when we talked earlier, when we were talking about the insurance going up, you're seeing the difference why their insurance is going to be more expensive than Mesquite.
Correct. That is correct. That is correct, guys. It's again just numbers, math. It's all realistically is, guys. All it is. Okay, we wow. All right, let's go to the second one, Cliff, man. Man, there is a mass migration from the Southwest United States in specific states. Let's look at these states real fast, y'all, and see what's going on with these states, because it's kind of it kind of surprised me a little bit, some of these states, but we got to look at it and see what's going on. All right, so let's dive in this real fast, Cliff, and then he will comment on this one as well. All right, here we go, guys. Here we go. Boom, and let's get it. Come on, today. There we go. Let's go.
There's been a big downward shift in California's housing market this year. Inventory is skyrocketing. Home prices.
That's my bad. It's California. Let me go to Southwest. We already know California trash. So we're gonna go over to the other real fast, y'all. My bad. Hold on. Replace it. Here's the right one. My fault, y'all. Don't shout me down. Here we go. Let's get it.
The U.S. housing market downturn has officially spread to the Southwest U.S. States like Arizona, Nevada, Colorado, and Utah are now all on the doorstep of a housing market.
Now, Cliff, those are liberal-leaning places, right?
Well, I don't know. Arizona, that's kind of purple. Nevada is red. Utah, definitely red.
Yeah. My bad. Yeah, you're right. My bad. Let's keep going.
Correction in 2025 due to a massive surge of inventory on the market, and in fact, prices are already dropping in the Southwest US. You can see since the middle of 2022, values are down 7.4% in Phoenix, 4.8% in Colorado, and by 5.3% in Provo, Utah. And now we're entering another period where the market is dropping in these states due to the fact that home buyer demand is at multi-decade lows. And that's now causing the inventory on the market to skyrocket. For instance, folks, I want to show you the state of Arizona. Okay. Zoom in on this, everyone. Arizona has 30,000 active listings right now on the market in inventory. That's a level that's more than quadrupled from its low during the pandemic. And now inventory in Arizona is at its highest level in a decade. And the housing market is a simple supply and demand equation, everyone. When the inventory goes up that high, it's telling you that the market is shifting down. And right now, in markets like Phoenix, we are seeing some pretty big price cuts. For instance, this is a 4-bed, 3-bath house in Peoria to the west side of the metro, where the seller just did a $55,000 price cut down to $395,000. That's a 12% reduction. Meanwhile, if we go to the east side of Phoenix, this is a 3-bed, 2-bath flip that the seller just did a $40,000 price reduction on. So we're starting to see in markets like Phoenix price cuts going to bigger and bigger levels, 40,000, 50,000. And ultimately what we're seeing in Phoenix, Vegas, Denver, and Salt Lake City reminds me a lot of what we saw in Florida about 1 year ago. If you guys have been watching my channel for the last 1 to 2 years, you're probably going to remember that in March and April 2024, I started reporting on how Florida's housing market was entering a correction. And much of the data that was happening in Florida back then, in the spring of 2024, it's starting to show up in the Southwest US housing market today, especially in a market like Las Vegas. You can see, according to data.
So Cliff, here's my question, right? When it comes to all this data, because this is a lot of data that's coming out, here's my question. Why do you think that in the Southwest US, they're seeing this home price tick go down?
I mean, it's demand. I mean, that's going to be the main driver of it. There's just not as many people. Number one, the prices are so high that they've priced themselves out of where the average person can even buy it. And there's probably too many homes that are above that. We had a huge inflation last couple of years, and it inflated above the average salary. So there's no way the average person can even afford it. So they have to align themselves with the buyer.
Yeah.
then, I haven't seen a huge increase in salaries or jobs. I mean, unemployment's low, so that's
Yeah,
good, but you have to really see if there's an increase in actual salaries, right? So you
sure,
can go look at that, look at the statistics on that. So
sure.
mainly it's just demand. There's just not enough demand. Prices are higher. Interest rates are playing a big role. It's not like you're
Yeah,
getting 3%, 4%. You're getting
yeah.
7 on an inflated number.
Mm,
So I think a lot of people think they're sitting on more equity than they are. They're
yeah,
saying their home and they're saying, "Oh, it's worth whatever, 500,000." It's probably closer to 450 they put on the market.
yeah. And I would say this here. I'm gonna play this real fast. Fed chairman, it's time to
Cut it, cut it, cut it, cut it.
it's time to cut these rates, bro. It's time to cut the rates, man.
It's been time.
It's been time because of the fact that there's a lot of churn going in. Now, earlier in the year, guys, I was saying I agree with the Fed chairman, and I did until I began to see how he was doing things. As Cliff said, he's very reactionary. He's not pro action. He's reactive, and that's not a good head of the Federal Reserve Bank, right? Now, I agree with Cliff when it comes to why stagnant. People manufactured pay raises with credit card debt, so it's up. So DTI is higher. The interest rates are high right now. As Cliff said, 7%. That's a high rate. Typically, you're going FHA, so you're doing PITI, which is principal, interest, taxes, and insurance, and PMI. And so that's an extra cost on there as well, also. And property taxes, are they going down or are they going up?
Oh man,
They're
property tax going up.
up. So your mortgage payment is going up, not just because of PMI insurance, but also for your property insurance. And don't get me twisted on the on homeowners insurance, because what's going on with all the hell is going on in Texas, what happened in California, what happened in North Carolina when it came to those natural disasters. What's happened? Insurance premiums are going up. So everything is up, right? So therefore, when things begin to go up like this, as a Fed chairman, you have to say, wait a minute, how is the market doing? Well, the market right now, Cliff, is rocking, isn't it? It's rocking. It's
Yeah.
killing the game. And am I tripping?
No, man, there's certain sectors that are booming. It's but the real estate sector. I mean, the problem is that there's just no movement.
Yeah. Yeah. It's not even moving at all.
No.
But I think that's about to change, so to speak. My question is this here is, even if it changes, I cannot see the Fed chairman making a move. Or if he did, it'd be like a quarter of a basis point.
in 6 months from now. You know what I'm saying?
You know what I'm saying? That's why he's gotten really political on his stance, and that's hurting people. That's hurting people, and you can't be doing that at all. So, Fed chairman, man, cut it,
Cut it,
Yeah.
cut it,
cut it.
cut it.
It has to get the market moving more. It's stagnant. It's been stagnant for years. I mean, he's made the amount of mistakes that he's made, being late on the inflation, and now he's late cutting. He didn't cut deep enough. You see the difference, right? You see how he's scared to rock the market.
Yeah.
Trump don't care. He rocking the market up,
Rocking.
down. He's okay with a little volatility. The chairman seems like he don't want no volatility.
He's afraid.
He's afraid of volatility. He's
Scared.
afraid if it drops, he can't get it back. I don't understand, because that's causing us another problem. Your unwillingness to make a move is causing another problem.
Correct. That is correct. So we got that going on, man. It's sad, man, but it is what it is. It is what it is.
Yeah.
It is what it is. So now, whenever this happens, Cliff, what becomes prevalent? Simple, guys. Distress property investing. Cliff, I got hit up, man, on LinkedIn today by an old colleague of mine. She asked me if I still acquired subject to investing properties. I said, of course.
Mm.
She has a ton of them coming. Guys, Cliff and I are about to fine tune our marketing play to be able to generate deals for our deal flow board. Our deal flow board, because we talk about buying distressed properties, right, below wholesale. So let's say, for instance, hypothetically, guys, we get 20 deals, right? Cliff, is it safe to include, are we going to buy all 20?
Nah, probably not all 20.
Let's just say we buy a fourth of that. So we're looking at what, five?
Right.
With 15 left, right? what we want to do, guys, is to be able to give those deals, right? Share those deals with our Cash Flow Club Pro members. These are below wholesale properties. We're talking about apartment complexes, new construction, and single-family residences, duplexes, fourplexes, sixplexes, eightplexes. We're getting those type of leads that's coming in, guys. We have a deal. I mean, Cliff talked about over in a city in Dallas. It's a plot of land, and it's in the middle of a subdivision across the street from a high school. We said, wait a minute, hold the phone. And so we're looking at that as a deal as well. It's the deals are coming in, guys. So whenever there's volatility like this, whenever there's some people that's like the Fed chairman being reactionary, being scared, that's prime opportunity for people like Cliff and I, and also you, to be able to hone those skills, go out and acquire properties, right? Distress, find those diamonds in the rough. And I'm talking about off-market properties, not on-the-market properties. Cliff, you agree with me, you disagree?
Oh yeah, I mean the biggest discounts you're gonna find are off market, and what I'm finding, and this is interesting, just from being an investor and moving over to appraising and looking at the market. By far, the biggest deals are in probate. I mean,
Mm,
I do a lot of that kind of work. They just want to get rid. They just want cash. If you give them cash, it's to them. It's just they have no emotional attachment to the house.
correct.
They just got it, and a lot of times they've gone through a long process of getting it. They don't
Mhm.
have they don't have what they're not looking to have another project to fix
Correct.
it up. That's not the world they come from.
Correct.
Those deals, I see people taking $100,000, $200,000 discounts. If you can give me my money next week,
Yeah.
bet they
Yeah.
taking it.
It's guys, it's real simple. This is the reason why, guys, I put that up there. It's for we want to give you a free distressed property ebook. It's free. It's free. Why not hone the skills now? Why you in kind of this limboville, according to the Fed chairman, but you're really not? Because I really believe that, Cliff, if or when the Congress passes that's called the big beautiful bill, and people begin to see tax cuts, I believe that's going to be kind of a boom coming, because you have external investments coming in, right? Coupled with lower regulations, lower taxes, which benefit companies as also high net worth or individuals and middle class. People, money they can begin to spend more money a little bit, and I believe, guys, they're going to become more lenient on lending on real estate. So it may see, hypothetically, it may be maybe a 40 or 45%, 50% LDTI. They may do 60. If you go to a 45-year mortgage, 50-year mortgage,
Hmm.
wrapped in insurance, that mitigates their risk. Lending is all about mitigating risk, Cliff. Would you agree or you disagree, brother?
Oh yeah, 100%. I've seen a couple of those. I haven't seen those go, um, be a major option where I'm seeing,
Sure.
40%, 40-year mortgage. I've seen it before,
Yeah.
but I haven't seen too many of them.
Mm, mm. Yeah, I agree. It's coming because they have to. They have no choice.
Yeah, and even when I did the math on it, it saves you like on these the homes I'm looking at,
Yeah.
300, maybe 350 a month. You know,
Nothing big. But for
yeah,
people, but people right here, man, $350 a month is a big deal for a lot of people, man. It
yeah,
is. That's
yeah.
somebody's car payment. That's a light bill. You know what I'm
That's
saying?
food. That's a grocery bill.
Ooh,
Yeah,
that's something, man. That's something. I think in China they have 99-year mortgages.
yeah, but that's a little bit different. They
Yeah,
China, they
very
do
different.
because the government owns it, and you
Exactly.
lease it from the government on
Yeah.
those ones. So that's different out there, man.
China is extremely different, guys, because it's all about the government there. But
Yeah,
I will not be surprised if I see a 40-year mortgage
nah, I've seen it.
becoming normal. It's already there, becoming normal. I'm already seeing 100% financing. It's a 90 to 95% if you go conventional, and then a 5% DPA, which is down payment assistance. And what if you pay the down payment, if you pay the payment or down payment or pay your senior debt on time, they'll forgive the 5% in 24 months. They'll forgive it. They do the same thing when it comes to FHA. You have a lot of families using the VAs too. Maybe one of the spouses had passed away, so the husband or wife is now actually has the ability to use the VA. What they'll do is they'll buy the house for their kids, which is fine, and the kids stay there. That's it, and that's how they gift the home over to the family. If that makes some sense.
Right. Yep.
That's been going on a lot, guys. So it's just, guys, always saying is distressed property investing, guys. It is time for you to hone your skills on this. So again, if you want to download the free ebook, guys, do two things. Number one, what you can do is you can click on the link below in the description down below, or you can scan on the QR code. Or, guys, here's another thing you can also do as well if I can find it. And I can't find it. Oh well, it is what it is. Or you can direct message me the word real estate, right? You can direct message me the word. I found it. Here we go. My bad, Cliff. I thought I had it, but I don't. Damn. Oh, here we go. Is that it? Yep. Or you can what you can do is you can DM me the word real estate. It's on the keys right there, guys. And our team will get you out that link. Just go download it. It's free. It costs you a dime at all. We don't want nothing from you. We want to give you the information. Right, we're all going to be relaunching the Cash Flow Club here in a couple of weeks, guys. I am our IT teams putting that together because what we wanted to do is we're wanting to invite you guys in to be able to be involved in our deal flow. We're going to get a lot of deals, so you have access to myself, Cliff, right? Consultation with Cliff when it comes to scope of works and appraisal values as well, whether it be apartment complexes, SFR, or new construction. Me from a banking standpoint, also, it's going to be pretty robust. We're trying to get it done the right way, guys. It's just taking us some time, but it's going to be a lot of fun. Also, guys, the good thing about it, guys, you actually have a licensed appraiser on the screen. It's Cliff Hunter. Cliff, tell them, man, what you do, man. Tell them what you do, man, as far as appraising.
Man, so doing residential appraisals, also doing some commercial appraisals as well. Really in multiple markets. So right now in Dallas and Houston, moving into Austin and San Antonio, and doing measurements, analysis, desktop appraisals, all different types in order to find the value of the property.
Mm-hmm.
And then not only that, but you're dealing with somebody who's actually done a lot of flips, major flips. You can ask this man right here, done $500,000 type renovations.
Mm-hmm.
You don't really get that type of experience from a lot of appraisers. A lot of them have appraised a lot of houses, but they actually have bought and sold a lot of houses. So, my company right now, we're growing. If you want some consultation, you can hit us up at hunterappraisal.com. And just reach out to us, go on the contact us, fill out the form, be able to help you out, be able to walk through a project with you, doing that for a couple of investors right now, where not only did they want the appraisal, but they wanted to review the scope of work and was able to identify a couple of different things they were missing, or at least to be aware of, because the plumbing was way too low. Electrical didn't include HVAC system because they thought the HVAC was separate than electrical, but it's not.
Wow.
The HVAC guy just said, "Oh, this is to install it," but that they don't understand you have to run a 220, so they don't know those kind of things. So yeah, definitely go to hunterappraisal.com. If you need any help, you need an appraisal consultation, whatever it is, go to the website, check us out.
Real simple, guys. Get hunterappraisal.com. It is on the screen right there, hunterappraisal.com. I don't know about you guys. If I actually had access to a licensed appraiser that could look over my deal and consult me on the as-is scope of work and ARV, no matter if it's new construction, SFR, single family residence, or apartment complexes, guys, I'll be on that dude's line all day long. Also, guys, real quickly, what we're doing also is I'm going to be rolling out in probably about a month. We're going to kind of, people don't understand that I actually own a mortgage bank. I do. I never talk about it because I kind of shut it down a little bit. Well, with the Cash Flow Club Pro Deal Board, what I am looking to do is open it back up to where even if you actually have a deal that makes some sense, whether it be through our deal flow board on your own, we can actually offer the financing you need to actually acquire it. Real simple. We want to take every single excuse out of your mouth when it comes to buying real estate. That's us from an appraisal standpoint, a work standpoint, a mortgage banking standpoint, an investor standpoint, and also a private equity standpoint as well. Also, so we're trying to be a one-stop shop for you guys to give you guys some type of counsel, and also some training too on how you can begin to invest in real estate. Cliff, you want to say anything, man, before we get off, Big Doe?
No, man, you already know what I'm gonna say. One deal away. One deal is all it takes. You'll be amazed how much one deal could do. It. You flip, make 30, 40. It's gonna change your perspective. I promise you.
It is, guys. Again, one deal away, guys. But you know how we end it every time. Before you leave while you can, baby. You see that thing. Now hold on, Cliff. Before you get up, man, I'm feeling that Maverick hat.
Okay.
I'm feeling it because what happened this week, Cliff?
We got the number 1 overall pick.
Say it with your chest, Cliff, for the people.
We got the number 1 overall pick. Now,
all you haters.
People try to say it's rigged. It's not rigged. We better than you. That's all it is.
All you haters. All you haters. Read it and weep. I don't care. We don't give a damn. We've been suffering this year with Nico Harris, his dumbass trading Luka Doncic out of the blue band. That hurt us. That hurt us. We don't give a damn. We don't care. It is what it is. Cliff, I love the hat, man. Go Mavs. Damn it. Go, man. Now, Cliff, man, you have season tickets there. You were talking about giving the boys up. Are we keeping them now? Are we keeping them now?
I got them, yeah.
Okay, you got it. Okay, I just want to make sure. Just want to make sure.
No, I had to double check. Yeah. No. And you can't get them now. They sold out because
what?
we got. Oh yeah, they sold out. When Cooper, man, I called in to my contact at because I was thinking about changing the seats where they're located, and she said you can't move nowhere. We are overloaded. She was laughing because I could hear in the background phone ringing.
Wow.
Phone ringing. Number 1 because we got what 3 Hall of Famers and a number 1 overall pick on the same team. Ooh, it's gonna be a fun season.
Fun, and hopefully AD won't get hurt. Jesus, Holy Ghost.
Oh man, he probably gonna get hurt. Listen, this is be honest. I mean, I think this is 7 seasons in a row he's had injuries.
Yeah.
So
yeah. But anyway, guys, thank you for letting us have that time of privilege because we got the number 1 pick. So if you mad, we don't give a damn. Kiss our ass. You know,
say it's rigged. I don't care if it's rigged or not.
I don't care. We won. Damn it. We won. We were. I mean, Cliff. At one point, man, we had a game. We having the players to play. We barely had enough players to play one game.
Yeah.
So hey, give it to
PJ got hurt, and I mean, we had every center out at one point. We had no centers.
No centers. None.
I saw a game. We pulled up the G. I had to go to the game. We had a G League player in. Man, I never seen this dude was sorry.
He was trash. He was trash. He was trash, man. Was trash.
Jason Kidd put him in. He had 2 turnovers in a row. He said, "Get your ass out."
It comes to that, baby.
He said, "Comes to that." That's why you in the G League.
Get your ass down. Go back to Frisco, man. Yeah, you're not ready. You're not ready.
Well, I ain't downplaying. G League players can ball though. I've been to a couple of their games. They can ball.
They can, but it's nothing like the NBA. No,
man.
There's levels to this.
Yeah.
There's levels to this. But guys, thanks so much for your time, guys. You know I'll be in it before you leave while you can. You see the thing. Take picture for your mom and holler at you about it. Have a good weekend, guys. God bless you guys. All right, y'all. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buying whole. Okay, so you're wholesale first. Okay,
because I was broke. I had no credit. I had no money, so I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated. There was.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property.
Right.
The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, That's why I made a lot lion's share of my money.
Wow.
People were
Okay.
actually running from the cows. I was running to it
Of course.
because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course. Of course. Of
So,
course.
okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy a whole lot of properties. Now watch this. I actually buy a lot of properties, and I take home money when I actually acquire it. Every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money with their acquired real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks.